Hello, what's up, everybody? Welcome back to my YouTube channel. My name is Godiva. So, in today's video, I'm going to be building on the last video which I did about structure. I'm going to be explaining more about structure. So, in the beginning stage, when you are learning how to trade, please know that there is a basic structure which is higher highs, higher lows, higher highs, and then higher lows, and there is an advanced structure which will now be talking about the internal structure, liquidity, and all of that. So, but the part we are going to be explaining now is, when there's higher highs and higher lows, higher highs and higher lows. In that price movement, we have expansion and retracement, expansion and retracement. That retracement you can also call a pullback. So we're going to be explaining what expansion and retracement means today. So why do we really have expansion and retracement in the market like this? Expansion, retracement, expansion, retracement, expansion, retracement, expansion. So you know that in our last video I said when we have an expansion like this, there must be a retracement because the market cannot just move straight ahead like that. So it has to move in a step case manner. The first thing is that the reason why it has to retrace is because first, when the trend is moving upward, a lot of people are going to be buying alongside. They're going to be buying alongside as the trend is moving, which is when the trend is expanding because it's already showing a direction that it is going to be buying. So a lot of people are going to be entering the market like this, like this, like this on its way. So therefore, price has to also retrace back. Price has to retrace back in order to remove those people that came into the market late, the ones that have not closed their the ones that have not closed their positions yet, and the ones that put stop loss very close to their entries, or the ones that put price into break even. Price has to retrace back to clear out those people before price will continue movement. Which means, let me explain again, which means price is running after liquidity. That is why we have expansion and retracement. Expansion and retracement. Price is running after liquidity. That is why we have expansion and retracement. Now, when the trend is expanding, that is trend is going like this. Now, as you as a trader or a retail trader or a beginner that is just starting out, you already see that the trend is moving bullish. He will want to buy from here, want to buy and enter the market. He may not even know if the market is at its highest points before it has to retrace. He may not even know. He just want to enter the trend and start buying. Why that one is very dangerous is because you are already putting yourself as a liquidity for the market to grab. So indirectly, when there is an expansion, this retracement is indirectly grabbing liquidity and clearing out liquidity so that it can continue upward again. Price is attracted to liquidity. So when there's an expansion, if there's anybody that is buying alongside and the person has not taken his profit yet, and the person has not put in stop loss into break even yet, this retracement will come back and put that person into loss and draw down, and that person may decide to close on a loss, or the person may decide to take a break even, or may take a profit depending on how the person is managing his trade. So it is very dangerous as a beginner to start buying when you see an expansion. What do we wait for? The first thing is that when you see an expansion, always know that there is always going to be retracements after every expansion. That is a key point for you to note. Once you get an expansion, note the highs and note the lows. Once you see the highs and the lows, know that there's going to be an expansion, a retracement after every expansion. So the expansion can be in retracement like a pullback like this, or it can be ranging. It may just be consolidating. It may not go deep like this. It may be consolidating. That consolidation may also be a retracement, can also be used as a retracement. So before the market will now break and continue the movement upward. So you have to understand that. Now let me go back again and start from the beginning. Let me explain. Now we have expansion, which is this. Price has to retrace back to take out some people who early buyers or late buyers. It has to take them back because price is attracted to liquidity. Now after price has taken out a lot of liquidity, price must have to continue because price now has a lot of liquidity to move higher. Now after a lot of liquidity has been taken out, price here currently have a lot of liquidity to move higher, and when it's now moving higher, it's moving higher with another form of expansion because currently there is now liquidity for the price to move. Now it is now moving with a BB candle, with strength and with everything. But this retracement does not have strength. That is how you differentiate retracement from expansion. The retracement will be coming like this. It is corrective in nature. It does not move fast, but expansion moves fast, and you see that there will be prices, there will be gap in prices, and there will be a lot of volume in the candles. But for retracement, it will move in a corrective manner. You see the price, you think maybe it moves in an exhaustive manner. Meaning there is no more liquidity for the price to continue upward again. It has to come first, take out liquidity from all this trend, from all the people that are buying late, that are putting stop loss into break even. It has to first of all clear them out, and then after it has cleared them out, then price now has liquidity to move higher. And in that next movement, it has to move with a lot of volume in the candles, and it has to also break the previous highs to show that price is really what in a upward direction. So I don't know if I'm able to explain it to the way you understand. Please, if you do not understand anything, just ask questions in the comment section, and I will be glad to respond to you, and I'll be glad to do another video about it. Now that is why we always have, after an expansion, there is always a retracement. The reason for the retracement is because price has to clear out liquidity and has to take liquidity to move higher. So whenever there is an expansion, note that there is always a retracement. And I said the retracement can be in two forms. It can be in a corrective manner like this. It is not fast. It will be in a corrective manner, or it will be ranging. Now let me draw that one again. This is an expansion. Let me draw the ranging part. This is an expansion. Now for price to retrace like this, it will not retrace like that. This is the normal one. And then when we have an expansion like this, for price to retrace back, it will now be doing something like this. You see that this place is a range, then it will continue upward. This range is basically another way of accumulating orders, because this consolidation here is accumulating orders. Some people might think that it want to retrace, and at the end of the day it doesn't retrace. It goes into an expansion, clearing out a lot of people who is trying to sell the market and all of that. So what we're trying to learn in this part is just to understand how price movement works, so that you can be able to make your decision when taking a trade or when taking an entry. So that is for that. Let me also explain it in a bearish manner. In a bearish manner, assuming we have expansion here, when we have an expansion here, price has to also retrace back. And the reason for this is also because price has to clear out people that are buying late. Price has to go back and take liquidity. We said the market is attracted to liquidity. So liquidity is a magnet of the market. So wherever liquidity is, that is where the price will go. So now price has to come back. It has to retrace. It will clear out all these people that are buying and selling there. That's if you are not placing your entry at the correct point, price may decide to come back and clear you out. And if you have not taken profit, price may decide to come back and put you in a drawdown. If you are panicking, if you are the type that is panicking, you may close on a loss, and at the end of the day price move against you. So we have to understand that this is what price does, because if you understand, therefore you will not be able to close your trade when price is returning against you, or when price is coming to your back to your entry, because you know that at the end of the day price must have to break below origin this origin where the expansion started before it can take you out of the market. So that brings us to another part of the explanation, which is what trading range. So trading range is an important part when when understanding how structure moves. So when we have an expansion like this, price has to retrace. Until price retrace like this, there is no high yet. We only have the low. So once price start giving you this retracement, then before you cannot say this is my high. Understand? So from this point, which is this origin to this high here, is our trending range. It's from year to year. This place is our trading range. So when price is retracing, price must not break below this low. If price is retracing, now we are in a bullish trend now. When price is retracing, it must not break below this low. It must have come to an extent, react to something here, and then continue the movement. And it must break outside this high here. It must not stay within this high. If it stays within this high, you must have to understand what the market is going to do in that case. So that is our trading rate. This place, this origin and this high, until price start giving you a retracement, you don't call it a high yet. You have to also take that into consideration. Now, once price is now giving you a retracement, you decide to now call this place a high. So this place is your trading range, and your trading range must be secured. When you are taking a retracement trade, know that you are going against the trend. And when you want to buy, when you are buying now, you know that this retracement must not break below this low, and then you would have to put your entry somewhere here and make sure that your your stop loss is at the low or anywhere that is secure, which you know that price is not going to get to that level. And then you can now ride price back to the highs, because definitely price is coming back to clear these highs. And then if price does not clear these highs, that is a video for another day. I will also explain that one. So we already understand what trading range is all about. So please, if you have any question in the comment section, please do not forget to ask, and also give me suggestion on the type of video you want me to be creating, and I'll be glad to help you. God bless you. Thank you very much. I remain Godiva. Please do not forget to hit the like button, subscribe, share it with your friends and family, invite them to join the channel, and then so that we can grow faster, because I would like to be having lives with everybody. I would like to be doing live video instead of recording videos like this. So thank you very much. God bless you.